Hello and welcome to the Switzer CEO Masterclass, and today I'm talking to Bryce Crocker, who is the CEO of Jervois Mining. Thanks for joining us, Bryce.
Thanks, Peter. Appreciate the opportunity.
Jervois Mining, it's such a highfalutin sounding name. It's a great name. Tell us about the company.
So the company's been around for 50 years, probably uninvestable for 48 of those, like a lot of other junior mining companies.
Yeah.
So I came in late 2017 and brought a couple of colleagues who I'd worked with previously, Brian Kennedy, Michael Rodriguez, onto the board. And I guess what we're looking to do, we're big believers in the electric vehicle thematic, but we don't think investors have viable alternatives, particularly on the institutional side, but obviously for your subscribers also. So we're big believers on the thematic. We think that we can build operating mines. We come from kind of large company backgrounds, but we think that at this end of the market we can do something pretty special and transition into operations in a way that typically isn't undertaken.
So what's the key product or products that comes out of Jervois Mining?
So we're focused on the cathode materials for lithium-ion batteries, cobalt, nickel. So when you look at a battery, the critical part is the cathode. Why it's critical, I mean, whatever's used for the anode doesn't really affect performance or safety. The electrolyte is lithium, there's lithium kind of everywhere. The cathode is what determines how fast the car is going to go, how long it's going to go, and how safe it's going to go, which is really the critical aspect in terms of electric vehicle take-ups. And nickel and cobalt are the important part of those, particularly cobalt.
What's the supply of those key products like? We're trying to get a handle on, just how potentially important Jervois Mining can become.
Well, cobalt's challenged. 3/4 of cobalt comes out of the DRC. So people have looked at it for a long time and said that's problematic. What's problematic?
Now, DRC,
Sorry, Democratic Republic of Congo.
Okay, right. Most people, normal people wouldn't know that, but miners would.
Unfortunately, I've spent too much time there.
Okay.
But what's problematic and what those of us in the industry have been most concerned about is less the DRC, it's China. The material from the DRC goes to China, and then it's going into forms which essentially isn't going to facilitate the expansion of the Western automobiles and OEMs electric vehicle fleet. We own the only cobalt, what will be the only cobalt mine in the United States. Cobalt's a strategic raw material for the United States. It's been listed as one of the 35. The level of political attention that this is getting in both Australia and in Washington is very high. And we will commission a mine. We're $100 million in, about broadly less to go, but a significant amount of capital to go to finish constructing the mine that we're talking to lenders on now. And we'll be the only cobalt mine in the United States in late 2021 when we commission.
Okay.
So
and where is this mine?
it's in Idaho, about 4 hours from the state capital, Boise.
Okay. Now, the trend for the cobalt market, what's it like?
The outlook's robust because I've never seen a commodity. I've been working in commodities my whole life since founding, been part of the founding management team at Xstrata. And when you look at iron ore and copper back in the days when China was booming, you could always come up with a scenario that said we're not going to be in structural undersupply. It could be unlikely. If you look at cobalt, it doesn't matter what you do with electric vehicles, vehicle ownership, battery chemistry, DRC supply. It's impossible to come up with any kind of scenario that doesn't involve structural undersupply. Now, our background is commodity trading. You can't have structural undersupply. You can't have demand exceeding supply that doesn't exist. So something's got to equilibrate. And really that's why we're doing what we're doing, coming into the public company space via Jervois, because I think the outlook is going to be fantastic. But importantly, the outlook can be fantastic because investors have to select quality of assets and also quality of management. And that's not a comment on myself, but that is a comment on the 12 or so executives that we've cherry-picked from Glencore largely, who we've worked with over the last 20 years. My chair, Peter Johnson, obviously he ran Glencore's global nickel assets. When I approached him to be chair, he mentioned you're 1/100th of the market capitalisation of other companies that have approached me to the same role. But that's the fun. We own 5% of the company. None of that's through options. It's our own money going in. We're bringing the co-investment model that typically invests in private equity into the public company space because the quality of management at this end, this is what your audience really needs to look at as much as anything when they're choosing which companies to invest at this end of the market, because the quality of management in general is poor.
Is there a well-known private equity firm that's come into it?
We're not working with private equity. We have
Oh.
Australian Super on the register
Yeah.
as an institutional investor,
Mm.
but we've come back into the public company space, and so
Yeah.
we're working with institutional shareholders in this market.
Okay, good. Idaho, USA, is there any sovereign risk, or are you seen as being a part of the family once your mine is in America?
I mean, firstly, it's a beautiful area.
Mm.
I mean, our project team, they think they're on vacation compared to most places they go to. It's
Yeah.
at 8,500
Better than
feet.
DRC.
Marginally better than the DRC. It's beautiful.
Mm.
But the US has no other cobalt operations. I mean, the reason that we have the political profile and the attention and why we're working with both governments is because cobalt's important.
Mm.
It's important for electric vehicles, but it's also important for aerospace and defence. Idaho is a very mining-friendly jurisdiction.
Mm.
I mean, I've had significant meetings with the Idaho Conservation League and Forest Service, and they're very supportive of the project in what's a sensitive area. And obviously this is a part of the US which is very, very pro-business, very, very pro-development in a responsible way. We're fully permitted, and I don't think there's any better place to be building a cobalt mine in the world than within the United States, given it's a strategic metal for the country and it has no other supplier.
Okay. So Bryce, how confident are you about the quality of the mine and the ore that's there?
We've spent a lot of time reviewing what is there, because again, at this end of the market, a lot of junior mining companies, they focus on the PowerPoints, they don't do the substance of what is required, because typically, and I've been on the other side buying junior mining companies, the stuff they do well, officers flying around the world going to conferences, the stuff they do poorly, QA/QC, it's the technical rigour that underlays what is in the PowerPoint that investors don't get access to and can't necessarily value. That's what they do poorly. So we've been focused on improving that. We acquired the company in July. We did 20% more drilling in those 4 months before the snow came than what's been done on the resource in the last 20 years. This is resource around de-risking. So I come from a banking background. How do you de-risk those first 3 or 4 years as we're going to raise debt so that you understand ore variability, metallurgical variability, potential oxidation, stuff that typically people gloss over, but that stuff that people gloss over, that matters for lenders, it matters for us as investors. So we've spent a significant amount of time. We essentially rebuilt the resource model together with a group out of Toronto who we worked with before from the ground up, completely fundamentally changed the block size. The resource is a narrow veined ore body, you've got to mine it selectively. Changed the block size, we rotated the blocks. We've completely changed what was done previously, and we're much more confident on the robustness of what we have, and we're working through that with the independent engineers on behalf of the banks shortly.
So what's the mines and your business's competitive advantage versus the others out there?
I mean, there's a slide that we have in our investor presentation where we benchmark against the greatest cobalt mines in the world. So these are all exclusively largely within the Democratic Republic of Congo. Grade and scale matters. So our mine's small compared to the great deposits in the DRC, but the asset is high grade, and there is nothing else in the United States. If you look across on the cobalt supply, you're either buying, as an investor, you're either trying to build high capital, high technical risk projects on lateritic flow sheets, doing high pressure acid leach on low grade ore bodies that may or may not work, spending billions of dollars, or you go to the DRC. Or you have a project like ours, which is small capex, low technical risk, near-term production. As we were going through and assessing what assets we wanted to bring into Jervois when we joined in order to create kind of a battery supply mid-cap, there was really no debate about this particular asset. It's the best asset that's out there by a material margin in the cobalt space that's in a jurisdiction which is favourable.
Okay, so how did the company perform last quarter?
We're not a producer, so we're a developer. We're moving forwards on the BFS. We sent out an information memoranda to debt lenders in December, had indicatives back at the end of January. As I said, we're working through with the independent engineers, appointing them now. So it's really about, because we're not promoters. I normally don't do this type of interviews, but we're about building a mine. And so now it's really around, we're working with lenders, and it's about how can we bring this into production most effectively and in a timely way. And project finance facility needs to close by mid-year in order to hit the construction windows for the seasons. So the banks go through credit in May, and therefore we're working back from that feasibility study, which is really I think the key, because this feasibility study, I'm not even proposing to market it. I mean, we're just going to publish it, and I think it'll market itself, but investors can decide.
So Bryce, listening to you, what I'd like to see is a chart, a completely accurate forecasting chart. I don't expect you to do it, which would show the growth of electric cars and the demand for cobalt simultaneously. And there would be a relationship between the two. So, and then I want to know when you guys are going to be fully in production, ready to go. Are they pretty?
No, they're easy. I mean, the cobalt market today is 130,000 tonnes. Yep. Probably 15,000 goes into electric vehicles. That 15,000 based on, reasonable projections. There's some variability in terms of forecast, but most forecasters are pretty consistent. It's probably going to be around 230,000 tonnes by between 2025 or 2030, depending on you. So the overall cobalt market at that point in time, you're essentially taking something from 100,000 tonnes to 300. There's not many commodity markets that triple within that period of time. Obviously, 2/3 or 3/4 of the supply comes from the Democratic Republic of Congo today. That's going to increase, not decrease. The geology is what it is. It's God's idea of a practical joke, putting it in place so abhorrent. So, and the market just can't respond fast enough. There's just not supply that can come on. We're small, so our production, we're doing 1,200 tonnes of ore per day, as permitted. So we're not of the scale of the projects in the DRC, which might produce 20,000 tonnes or 30,000 tonnes. But we're not that far behind some of the larger lateritic projects in terms of production scale for a fraction of the capital cost.
So when do you guys expect to be in full production?
End of 2021.
End of 2021. And by then, the demand for electric cars, what do you reckon?
Well, cobalt market today is probably 130. By then it'll be 150, and you'll probably have 25,000 going into electric cars. There's also super alloys people forget about, because electric vehicles is obviously a big part of the market. It's a big part of the growth. The fact that cobalt goes into super alloys, into aerospace and defence, these are also growing sectors. They're important sectors, not particularly substitutable in terms of safety critical parts for jet engines. There is no, you don't substitute that. You don't cut corners. So the outlook for the cobalt market's strong, but again, the wave is not going to just kind of take all boats equally. It's going to take the boat that delivers and gets into production, actually generates cash flow, and has growth to actually participate in that and be taken seriously by OEMs.
Thanks, Bryce.
Thank you, Peter.
And that was Bryce Crocker of Jervois Mining.